Good afternoon and welcome to our third webinar covering the support available to directors during the COVID-19 pandemic. My name is James Mattam. I'm the Group Business Development Director for Tax Assist Accountants. I'm here and joined with me two colleagues, Darren Moore, who's our Group Commercial Development Director, and Sam Scarring, who's one of our Senior Technical Managers. Now, they're both qualified accountants. They're both here to answer those questions and cover off all the different topics of support that are available for directors. Now, we know there's a really tough time out there, and we want to educate and update as many people as possible. And as accountants, we're well positioned to be able to do that. So without further ado, I'm going to hand over to Darren and Sam, and we're going to cover all the support available to directors. I'm going to be on the chat, so if anyone has any questions live, I'm going to be doing my best to signpost to the correct answers. However, we may well cover your question within the slides, so do watch these for the next half an hour, and we'll progress on from there. Thank you very much.
Thank you, James. So, welcome everybody. I'm just going to let Darren just go through some of the options that are available to directors.
Yeah, thanks, Sam. As James has explained, this is our third webinar, and this is focused largely around director support. Obviously, this topic, this pandemic, is far broader than that in terms of impact, but for today we're going to cover on the director side, because this has had fairly far-reaching impact for most company directors. And we're going to start by looking at the job retention scheme, the furloughing scheme. You will have seen that's been very well publicised today and in recent days. That's actually launched today, as you will have seen in the press. So it's very, very topical. It's also one that's changed very significantly over the last few days. Friday and Saturday and Sunday saw a number of announcements from the government and HMRC about how this is going to work. So we want to talk about how that works and specifically how it applies to directors, because there are some particular aspects that directors need to think about. So we'll go through that in a fair bit of detail. We also want to talk about some of the other support structures in place for directors from an income point of view. So as you can see from the slides, statutory sick pay, we'll talk through that very briefly. There's some discussion around how you can defer income tax payments and payments on accounts, so we'll cover that. Universal credits you'll be familiar with, and they are an unfortunate reality for a number of directors out there. And then we'll talk about a specific change for company directors about wrongful trading rules. So we'll cover each of those in turn, but we'll start with furloughing as a fairly significant topic. And what we're going to talk about first is very broadly how the scheme works. It'll be familiar for some, and then we'll start drilling down into some of the specific aspects for directors. So.
Thank you. So, quick recap. I'm sure a lot of you are familiar with these rules now. So, the Coronavirus Job Retention Scheme actually covers the lower of 80% of the usual basic monthly wage costs, or up to a cap of £2,500. Now, based on those calculations, you are then also able to claim the employer's national insurance contributions, and if applicable, the minimum automatic enrolment employer pension contributions on top of that. So 80% of the wages from their last pay period is actually the pay period before the 19th of March 2020 for full or part-time staff. However, calculations may involve working out averages if they're paid for irregular hours or different pay fluctuates month on month, and then in which case you need to look at the higher of the average of the 1920 tax year's monthly wages, or 80% of the same month's wages from the previous year.
Sam, it's probably worth pointing out on that slide. I mentioned some changes. A number of the things we'll be talking about today have probably been updated over the last week.
Yeah.
So for some of you, they may not be familiar, or things may have changed. So the 19th of March one is worth mentioning, because that is a fairly recent change, isn't it?
Yeah, absolutely.
And that was part of a concession by the government. It was originally 28th of February, but they've tried to capture more people into the furlough calculation scheme. So that's just something to be mindful of. It may be a change from the last update you've had.
Lovely. So just a few other bits of information, just in case you're not aware. The minimum period for furloughing is actually 3 consecutive weeks, up to the current deadline, which again has very recently been extended to the 30th of June. It was up until about a week ago, the 31st of May. Employees can be furloughed multiple times, but each separate instance must be for that minimum 3-week period. And it's worth just mentioning here that claims can be backdated until the 1st of March, where employees have already been furloughed. So when it comes to actually directors specifically, the first thing to point out is that furloughing is available. Now, there obviously are some guidance and some rules behind this, some restrictions, in that in order to be furloughed and have an eligible claim, you cannot work. Now, when the guidance says you cannot work, from directors, what they mean is you cannot carry on your business in the normal circumstances to generate commercial revenue or provide services. But what you can do is still perform statutory duties. So things like filing accounts, completing your confirmation statements, anything to do with those statutory duties as a company director. Again, with directors specifically, just to point out, unfortunately, the scheme only covers salary. Now, this is obviously one of the biggest issues because most directors will be taking, I would imagine, larger amounts of dividends and a small salary, which, if we're not including the dividends, is going to throw some issues in itself, but we'll talk about those in a little bit more detail at the moment. The salary must have been paid through the payroll, so it should be submitted via the RTI process. You should ensure that if the director is going to be, or you as director are going to be furloughed, there obviously has to be some kind of documentation, and this is where you would have to get it minuted by your company to show that you are being furloughed as a director. Okay, and then a very important thing in red that you can see on screen, furloughing, whether it's an employee or a director, you are changing the employment terms. So you would need to seek specialist help on this matter. Okay.
Let's just talk through some of the practicalities, I guess, for directors. And Sam's touched upon these to a certain extent already. And this has been the basis of a huge number of questions that have come into us and our network around how it works for company directors. And it's been a popular topic in the press and media as well. Because there's a sense of unfairness about this, really, and particularly for directors, and especially for small company directors and sole directors. And I'll explain what I mean by that. Sam has talked about the rules and how they work in terms of working or not working. Now, just to caveat that slightly, there's still a lack of clarity around exactly what that means. HMRC and government are working very quickly to get this in place. We've talked about the scheme being up and running today, which it is. But there's still a lack of clarity in certain areas, and this is one of them. Because where's the line between running a business and statutory responsibilities? That's a really difficult one for particularly small companies. So you're a sole director, or you're a small group of directors in a single company. The wording as it stands suggests that you would, in effect, mothball that company. So you wouldn't be trading in any way. You would simply be dealing with those statutory responsibilities. Is that really practical? You are looking after a company, you are potentially the sole employee of that company, and you have got suppliers or customers or contacts asking you for updates on where things are. Even if you stop trading, is it realistic for you to say, I can't do any of that? We have concerns about that. I'll come on to what we've done with those concerns in a while, but there's a discussion going on out there in the moment about what that means. Now, for some, simply shutting down is possible, and that's a very clear case where you would say, we're not carrying out any work as such, therefore we're furloughed. But there are some grey areas there. We'd love to have answers on that, but at the moment, the guidance just isn't definitive enough. So that's a challenge, and that's a question of looking at specific circumstances, we suggest, and talking to advisors, talking to accountants about what that may mean for you personally. So be mindful of that. The second area that we think is unfair, particularly for those typical small company directors, is around how they're normally paid. Now, this isn't always the case, but in many cases, directors will take a basic salary, £8,000 or £9,000 a year, let's call it, and then the rest of their income is driven by dividends. Now, those dividends are perfectly legitimate. That's a distribution of profits from a company. That's all accepted. However, it does mean that the average furlough calculation for those directors is going to be based purely on what's going through PAYE. As Sam said, it has to be going through payroll. We believe that's unfair. We believe that isn't really a true recognition of the way that small companies work, and there are hundreds and hundreds of thousands of those small companies doing the same thing. So what have what have we done about it? We do feel it's unfair. We get lots and lots of questions in, as I say. No doubt we'll have more questions coming in as we go through this webinar. But we've picked up and we've tried to represent our small business and our clients on behalf of our network by doing a number of things. So we've written to the Chancellor. We did that about 2 weeks ago. And we've written on a number of fronts around the schemes and how they work. We've acknowledged that those schemes are helpful, but we've also acknowledged that there are gaps in those schemes and there are a number that may suffer, and directors and small company directors are amongst those. So we have tried to represent those small company directors and talk about what we think is fair. And what we think is fair is a recognition of an element of dividends somehow. And just to reinforce that, we wrote to the Chancellor about 2 weeks ago. About a week ago, a Treasury committee that was set up specifically to look at feedback from taxpayers and from companies issued their findings to the Chancellor. And those findings included exactly that point. So unfairness around directors' remuneration and dividends, amongst many other things, actually. And we're starting to see that pressure being exerted on government. So we hope, we can't guarantee we're in unusual times, but we hope that some of that pressure will start to be reflected in announcements. We've already seen, I talked about the 19th of March change earlier. That was a concession to pressure. So we are starting to see that that pressure is having an impact. We hope that we start seeing some recognition of a director's position. We shall see. Our job is obviously to keep our network and our clients informed of those changes, which we will do as soon as they happen, and things are moving very quickly. The final point on this slide, which is worth bearing in mind, is we have 76,000 clients as a network. So we are hugely representative of that small business community, including small companies. So we want to make sure we're representing them in the right way. So what we're doing to demonstrate that is a number of things, including running a survey. So you'll see when you receive these slides, there's a link through to a survey that we're running at the moment, and we'd encourage you all to take part in that survey. I think we've had about 3,000 respondents so far, so it's been very successful. That gives us a chance to make your voice heard. And it gives us a chance to represent you all and to take that to PR, press, media, and back to the government just to explain these are the views of small businesses out there. So please do have a look at that if you can. But we do understand it is difficult for directors. Unfortunately, we don't have all the answers, but we can support you and apply pressure.
So just quickly, we thought it'd be useful to go through an example. So we've got a full-time director here taking a regular monthly salary last day of each month. And the director actually agreed to be placed on furlough from the 1st of April 2020. They were paid £2,400 the last full monthly pay period before the 19th of March 2020. So simply what you do is multiply by the 80%, which gives you 1,920. It's clearly well within the threshold of the 2,500 cap, so that's fine. And then what we'll do is we simply add on the employer's national insurance on that 80%. So the actual claim that you would get back from the government for that would be £2,083.94.
Can I just make a point on that date again, if I may, Sam?
Yeah.
We'll come on to questions at the end, as James explained, and there may well be a question on this, but I mentioned the 19th of March change. That's an important one to bear in mind. The idea there was it would capture more people, including potentially directors, under furloughing. So anyone that joined from the 1st of March to the 19th of March was in theory supported through that change. However, that only applies if you've actually processed a payroll through RTI in that period. So if you are employers of a number of individuals, you've had recent starters, do check with your accountants on that point, because as always, the devil's in the detail. So that extension is helpful, but it may not be the right answer for you. So just a point to check on, because that is a fairly recent change again.
So obviously Darren mentioned this earlier, so today is the day that we've all been waiting for, so to speak, in that HMRC have launched the official online portal to make your claims under the job retention scheme. We've included a link here. The reason being is that you can actually do these claims yourself, but you do need to be aware that you would need an online PAYE account already set up to be able to access and process the claim. However, you know, at the end of the day, this is a new process for everyone, so don't be afraid to speak to your local accountants, because they'll be very well versed in experience and doing lots of these claims for their clients, so they can help you do this, so don't worry too much. The one thing everyone asks is, when I make the claim, how long is it going to take me to get the funds in my account? That's the important thing, cash flow. And as you can see there on screen, it can take up to 6 days. Now, this is purely what HMRC has just told us. So we have no idea how accurate that information actually is at the moment. So we hope it takes 6 days. Who knows, depending on the volumes going through, if it's going to take longer. Okay, but in relation to timings of the claims, I'll just pass it down.
We are in uncharted territory here. This system that's being devised is enormous. This portal that's been created. It's designed to allow for 450,000 individual claims an hour, which is enormous. And apparently 65,000 claims were processed in the first half hour this morning, so by 8:30 this morning. So it's an enormous system, but it's an unproven system. So things like time taken to receive the money, which is what this is about. It's a reimbursement system at the end of the day. We shall see. The government's invested a huge amount of time and effort in doing this, so let's hope it works. And just to go back to a point that Sam raised, calculations can be complex, particularly around variable hours, variable rates. So do be mindful of that, because it's sometimes the calculations that take time, not just the claim itself. The point about timing of claim is, again, something that was made clear today and has been subject to lots of questions. The system is reimbursement, so it's there to try and help employers to cover costs of employment. So inevitably, there are lots of employers, lots of companies included, who are waiting to receive money before they pay out money. But the assumption was that this would be a retrospective claim. In other words, you run your payroll. Doesn't necessarily mean you pay people, but you run your payroll, you calculate the entitlement, you calculate the numbers, you submit to RTI, and then you make your claim. So it's a retrospective claim based on what's gone in. That was the expectation, but actually that doesn't look like that's the detail that's come out today. It looks like, and it is early stages, it looks like you can make a claim up to 14 days before you actually run that payroll. Now that's really important for directors and for bigger employers, because what it means in theory is if the claim goes in time, you can receive the money before you have to make payments, which is hugely important. So we're still looking for clarity in that, because again, these things are coming out really quite quickly, but it's possible that you can make a claim early. Now that could help cash flow wise, but it does come with a few health warnings, because once you've made a claim, the claim is made and you cannot make another claim for that period for any employees. Now, why does that matter? What happens if you get it wrong? Okay, you'd hope it wouldn't be wrong, but what happens if you make a claim and then between now and the end of the month, you furlough somebody else, or somebody comes off furlough because you need them back to work, for example? In both of those situations, you potentially miss out because you can't adjust the claim. So just think about the timing of the claim. It is, cash flow wise, it's enormously helpful that that can come in earlier. So we fully expect a huge number of employers to be making those claims quickly, and the government obviously expects the same. But talk to your accountant again, because the timing may limit you in terms of your actions over the next 2-week periods. So just give that some thought when you're looking at making the claims and talking to your accountants about them. Okay.
Lovely, thank you. So just here, for any of you that are either doing the claims yourselves or, you know, assisting your accountant and they're doing the claim for you, we've just put up on screen a list of the sort of key information that you're going to need in order to make your claim. So you can see there things that you'd expect: employer POA reference numbers, the number of employees you're going to furlough, national insurance numbers of those employees, names, payroll works numbers, your self-assessment UTR, unique taxpayer reference numbers, corporation tax reference numbers, company registration numbers, etc. The claim period, when you actually want to start them furloughed to when, the end date, the amount that you want to actually claim, and then obviously key thing is to get the money is you're going to need to supply your bank account details and sort code, and it has to be a UK bank account. Okay. So this now moves us away from furloughing and onto another option that's been available, is statutory sick pay. Now, obviously, statutory sick pay has been around for years and years and years, but under the coronavirus and the rules changing, what they've actually done is they've actually made it so that it is claimable from the government for up to 2 weeks. Whereas it was not that previously. You're obliged to pay statutory sick pay to employees if they're off sick, but you weren't eligible to claim anything from the Another change that's happened within statutory sick pay is you no longer have to wait to day 4 of sickness. You can actually claim from the very first day, day 1. Currently, the rate of statutory sick pay has changed on the 6th of April, is now £95.85 per week. And any employer with fewer than 250 employees will be eligible. Okay, like with normal statutory sick pay, you need to make sure you maintain records and information of any statutory sick pay paid. And the rebate scheme we haven't actually seen live yet because it's not been fully launched. So just make sure you keep the record of all that information, and then we can claim the rebates as and when the system is launched. Income tax, now hopefully a quite straightforward one. Government don't normally like to make things straightforward, but this one is. So for any of you that are paying self-assessment payments on account, one coming up at 31st of July 2020, these payments will be deferred until January 2021. This is an automatic offer, so there's actually no application processes or anything like that to do. It will be automatically applied, so therefore there'll be no penalties or interest if you decide to not pay it until January 2021. Okay, and just as you can see on the last bullet point, this only affects the people that have got to pay payments on account. Universal credit. So obviously this is, again, universal credit's been around for a while, but this is obviously the backup for if you're not eligible for some of the other grants or schemes that are out there, you may be able to claim universal credit, providing you meet their eligibility criteria. Now, from the 6th of April, the requirements for the minimum income floor for universal credit has actually been temporarily relaxed and will last for the duration of the outbreak. The sort of major change here, I suppose, is that if you need to claim, you no longer need to attend the job centre, obviously under the social distancing rules. That makes sense. But just be careful with universal credit, because any claims under other schemes can actually impact upon the amounts of universal credit you can actually claim. So just be wary of that. And then we've put a link to where you can find further information and support if you are looking to potentially go down this route.
And I'll just reiterate that. We've had lots of queries in about universal credit. It is a complex system, and it's a system under an awful lot of pressure in the current situation. And it's a sad reality for a number of small company directors and for self-employed, actually, in terms of delays in funding and gaps in funding, as we've talked about. So universal credit's had millions and millions of applicants in the last few weeks. But they are complex rules, and it is important to go onto that website and have a look at the details. So, for example, there are rules around capital funding available, as well as links into other income sources. So it is well worth going through that government detail, and it's been built and developed significantly the last couple of weeks, but it's well worth going through it in detail to see how it may apply to you.
Yeah.
And one final area that's relevant, and I'll cover this one off. This, again, a sad reality of where we are. So wrongful trading rules have been around for a long, long time. The wrongful trading rules are designed to protect creditors. And what they cover is company director behaviour. And what they mean is that if company directors have a company that's potentially insolvent, if those company directors choose to act in the wrong way in the eyes of creditors, so they pay the wrong people, or they don't pay creditors, they bias towards other things, perhaps taking the money out themselves, there are sometimes risks around challenge for company directors under what are called wrongful trading rules. And the reason it's matters for company directors is they can, in extreme circumstances, become liable, personally liable for those debts that have been created because of their actions. So that, they're worrying rules for company directors, but they're not that well known. The relaxation that's just been put in place is therefore important, because clearly companies are going to be struggling to work out how all of this affects them. Are they going to be insolvent? Are they not? Some may be. Some may temporarily be until funding comes through. What the government wanted to do was to avoid lots and lots of wrongful trading claims down the line by creditors or other third parties. So to stop that, they have suspended temporarily those rules. Initially until 31st of May, but I strongly suspect that, as with other things, that will be extended as this situation develops and moves out to June, July, whenever it may go to. So as company directors, that's an important one. It's worth looking at the slides. It's worth looking at some of the detail that we have on that subject, because that was a real concern for directors running up to this relaxation, and it is worth keeping track of as you come out the other side of this current crisis. So well worth a bit of focus on over time. Okay, thanks, Sam.
So a couple of other final points, just to sort of mention, some of these may be applicable to you, some of these not. The first one being deferral of VAT payments. Obviously, again, this is another nice one that the government's done in that it would be automatic. But I cannot stress this enough, because a lot of people pay their VAT by direct debit. Now, unfortunately, if you're on direct debit, this will still come out. So you need to make sure you cancel your direct debits. Okay, and then you get the deferral. There's grants for businesses that pay little or no business rates, and we've also got the business interruption loan scheme. Now again, might not be applicable to all businesses, but we have got further information on these on our hubs on our website. So please do take a look and obviously get in touch with us if you want to go through the information on these.
We deliberately haven't gone into these things in detail, partly because we wanted to focus today on directors' matters and some of the other topics we think are more relevant, but also because, as Sam says, we've already got information on our client hub that will help, and we've covered those in a bit more detail in our previous webinar. So you can refer back to the previous webinar content to look at those. But certainly the rates position, the loan schemes out there are important for businesses. So do look back at those webinars and do look at our resources if you need to, because there are some significant sums of money involved.
Yeah, definitely.
So just to wrap that up from our point of view, and then we'll go on to some questions. Things we can do to help. So we're all in this together in terms of difficult times, and we're all trying to find the best way to look after our businesses. We're doing the same as you are in that respect, and we're trying to find the best way to advise and support people. And it is difficult. So we do a number of things to try and help. So source of information. I've been in the accountancy world for about 26 years now, and I've never seen a situation where I've seen as much information come out in as short a space of time. Huge amounts of detail, some of which contradicts, some of which very quickly supersedes that that's gone before. It's been very, very tough to keep track of it. So our job is to try to distill it and to help interpret it for your benefit. So that's what we're doing, and the Client Hub has a lot of information on it that's exactly that, summarising things that matter for our clients so they can understand how these things affect them. We also help, hopefully, with our clients in terms of them doing things in their business. In difficult times, there are some difficult decisions to make. Keeping staff, investment, scaling back the business, it could be many different things. Sometimes that's a decision you don't want to make alone, and you need somebody to talk to. So that's another role that we've been fulfilling, working alongside our clients, helping them, even if it's just a shoulder to cry on in some cases, but also giving them some financial analysis of where things are in their business to help them make informed decisions. There's a lot of speculation about what the current situation will mean. There's an awful lot of short-term funding coming in. Hopefully that will benefit most, if not all. But there's some long-term challenge as well. We don't know how long it will take to get out of this crisis, but an awful lot of what's happening is deferral. So it's deferral of debt, not simply just income. And that deferral of debt is going to have to be paid at some stage. Some of the things that Sam's talked about, deferral of income tax, deferral of VAT, is great cash flow-wise, but that debt will come back at some point. So the view is for lots of businesses, there'll be a second pinch point, if you like, which will be when this debt falls due. So it's really important that you understand your business and your finances. And it's really important that you look forwards to how your business will cope when that debt becomes due. So things we can help with. We can also help look for funding. We've talked about the coronavirus business interruption loan scheme. That's now getting up to speed. The government would still like more, but the application process has been quite challenging in terms of the information needed. So we've helped a lot of clients not just look at the funders, but look at the application process and help them with information for that application process. So we're here to do that. And finally, we are well connected to the network. There are lots of things we can do ourselves. There's lots of different services we can provide to our clients, but we know that there are certain things that external help is needed for. And employment lawyers is something Sam's mentioned in the context of furloughing. Furloughing varies employment contracts, so it does need to be taken carefully for that reason. So we do have connections with employment lawyers, and certainly when you're looking at furloughing and documentation, getting that view from an employment specialist is important. So we would encourage you to talk to those people if you can. But we have those links and we have those contacts should that be helpful for you. So lots of ways we can help. Leave you with a few thoughts before we go into questions. So what would we like you to do? We'd like you to talk to us. We are here to help. We are here to advise. We have been going through this change. All of our network's been going through this change as you have. But we want to talk to you and help you and demonstrate that we're here to support you. So please do talk to us. Do think about your numbers. As I say, you need to understand your immediate cash needs, absolutely, both personally and as a business, but you also need to understand that longer term view as well. And make sure you make use of all the government schemes and release. That sounds obvious, but the survey I talked about earlier with about 3,000 respondents, as I say, there were a huge number of respondents that weren't fully aware of exactly how those schemes and reliefs work. Now, there's lots of information out there. We've done a huge amount in terms of updating. Our network's done a huge amount in terms of updating, but there's a lot of information out there, as I say. So do make sure that you're up to speed on how all of those different schemes work and how they matter for you, because it would be a tragedy if people get to the end of this having struggled, potentially businesses failed, but it was needless because there was support there for them. So do make sure you're familiar with everything that's out there. So I think that's it from us in terms of content. What we thought we'd do just to try and help support some of these points is we'll go through some questions. We've got live questions coming in. We've got some questions that were noted previously. So Sam and I are just going to work through. Question I've got from, and we won't attribute these in detail, we'll just use first names. So we've got a question in from Andy, which is about furloughing claims. And I think I've answered this. Can furloughing claims help pay April salary? Yes. It can. In theory, if the 6-day rule applies, if you get a claim in within the next few days, then you should have the monies through based on government advice by the end of the month, which will be there to meet your salary payments when they fall due. And we fully recognise there are a lot of businesses out there that will need that money to pay the salaries. But bear in mind what I said earlier. Once you've made a claim, the claim is fixed. So do think about any changes you may need to make to your furloughing position over the next couple of days for yourself or for your staff, and just think about whether you need to defer the claim on that basis. But I think that's a fairly simple answer to that one. A question I think was lodged previously from Steve. And sorry, we're going to talk a bit about circumstances here just to put these things into context. So Steve said, hi, can I still work as a self-employed decorator and still receive the government payout in early June? So I think what Steve means by that is can Steve furlough as a director of a business and still do other work? And again, it's a question we've been asked. The simple answer is yes, you can, but just be careful. So why do I say that? If you are furloughed as a company director and have a separate income source as a self-employed individual, that's fine, and we can understand why people will use their skills to generate income elsewhere, and that's happening in all already. You have to register for self-employed purposes. There are some compliance issues there you have to deal with, but yes, it can be done. Where you have to be careful is the rules of furloughing and ceasing to work. What you can't do, or what the government I think would take a dim view of, is simply transfer contracts and clients out of a company, furlough it, and then work on a self-employed basis so you get your furlough sums. We would recommend you're very careful about that. Now, we don't know exactly what anti-avoidance rules the government will put in place retrospectively. At the moment, they're focusing on funding people, understandably. There will be checks and balances on this at some point down the line. So if you are looking at furloughing and taking trade elsewhere, just talk to your accountants about that and just be mindful that if you're too overt about that, that may be something that's challenged down the line. We don't know the rules as yet in detail, but the likelihood is that there would be a challenge if you're simply moving work from one to the other. So Steve, that sounds like that's probably a question you need to talk to your accountant about, I suspect.
Yeah, definitely. We've had a question from Alistair. I understand that the calculation for the claim for furlough pay at 80% of normal pay can be based on earnings from the last 12 months, but are overtime commission or bonuses included in the last 12 months, or is it just based on basic pay? Yeah, the government has specified that it is based on basic pay and any other sort of compulsory pay elements, so compulsory commission, but it will not include things like discretionary commission, bonuses, non-cash payments or benefits in kind. Okay.
Yeah, and that's a common question we've had in, particularly the tips and variable amounts that we see in a lot of different workplaces has been covered a lot, hasn't it? But
yeah, exactly.
the rules there seem to be quite clear about contractual position, only contractual position, don't they?
Definitely. I can just see one come in a little while earlier from Mark. Is there a deadline of this Wednesday to physically make the claims? This Wednesday is just referring to the fact you have to make the claim by the 22nd in order to get the payment by the end of the month. Okay, so there's not an complete deadline for all future furlough payments. That's just in order to get the money by the end of this month, you need to make your claim by this Wednesday. So hopefully that answers that question.
And there's a question from Paul, and some of these questions might have come in earlier in the presentation, so some of them have been answered as we've gone through. One from Paul: is it possible to continue paying yourself a dividend whilst being furloughed as a director? Yes, is the simple answer. If the company has got distributable reserves, you can pay yourself out a dividend. Nothing to stop you doing that. The only challenge here is that the dividend doesn't get taken into account in the furloughing calculation. It doesn't stop you paying a dividend. So just be mindful of that. Okay, I think we had another question coming in from David a little bit earlier as well, Sam. Do you want to cover that one?
Yep. So David said, been trading for under 12 months and believe this makes me ineligible for some of the support packages. How do I stand on this? Both myself and my wife are employees of my business. Currently, we've applied for and shortly are to receive universal credit. Now, firstly, there's a maybe slight bit of confusion there in relation to, I think you're thinking of the self-employed packages of support, whereas as a company, what you could be doing is looking at, as a director and your wife being an employee as well, you could look at furloughing as an option, providing through your company you've been paying yourself a salary and it's obviously been reported through your payroll. So it's just worth looking at those. You do have to be careful, because I do know that a lot of directors working for their own limited companies, they see themselves as self-employed, so they keep looking at the self-employed scheme. But as directors of companies, you are treated very differently. The main sort of source is looking at this furloughing side of things.
There was a question slightly earlier, and I think we scrolled past it, from Gavin, which I'll pick up on because that's a question we had from a John before we started the webinar. And I'll just, Gavin's question, so closed retail premises, no revenue generated, so it sounds like the business has been shut down. However, we do some client automated invoicing in our accounting software. We can't cancel these as they cover costs of services we are providing already under active contracts. Would this prevent me from furloughing myself as a sole director? That's a really interesting question, and very similar to one we had previously, as I say, from John. The honest answer on that one, I think, is we don't fully know the answer. We talked earlier about statutory responsibilities. Now, if you've closed a retail premises and there's no revenue generating, then you'd have a pretty strong argument, I suspect, that company, that business has been ceased and therefore right to be furloughed. If you've just got automatic entries going through, which you're just barely overseeing from your accounting system, I think it would be very unfair for that to be seen to be stopping you furloughing. And the question from John that I mentioned was very similar, in that John was just effectively ticking over the business, dealing with basic banking, VAT compliance, that sort of thing on the bookkeeping side. Again, there's no hard and fast rules on that one, but it would seem hugely unfair for furloughing claims to be stopped on that basis. Again, we won't have all the details in those questions. Talk to your accountants, because ultimately it will be down to the specific circumstances you have. But you'd like to think that there's a little bit of flexibility around that statutory responsibility piece, because it's not defined that closely, is it?
Yeah, definitely. Another previous question we had in from Lynn. Company director, pay myself a small dividend, but no wages or salary. Does this mean I have zero entitlement? Unfortunately, yes, it does. Because like we said, the furlough claim is not based on anything to do with dividends, so they're completely ignored at this point in time. So the only thing you go through is a salary that has physically been reported under the RTI payroll system. So if you haven't put anything through, you've got, unfortunately, no claim to make if you were to make yourself furlough.
There's a question for Sashin, I think it was, just a little bit earlier. Did we just scroll past? Are the claims made under furlough credits to the company bank account or the personal account of the director?
Company.
Company, I would presume.
The claims are going to be made to the company, and it's up to the company to pay the employees, because obviously it's up to the business to decide, are they going to just pay what they've received from the government, so the 80% up to the 2.5 grand, or are they actually going to make it up? So some businesses are going down that route where they will actually make up the difference to normal salary.
And the question just above it, what about SMEs in serviced offices like Regus? They pocketed the small business rate relief and don't pass it down. This is killing SMEs. We're classed under the service agreement rather than the rental agreement. At the moment, there's little we can do on that other than sympathise. I think that's Glenn. And we've seen this a number of times before. There was suggestion that those rules will be looked at by local authorities.
Yeah.
We have seen that mentioned for exactly that reason. An awful lot of small businesses missing out because of their serviced office arrangements. We think that's being reviewed. We can't guarantee that, but we have seen evidence that that's at least being considered. So let's hope that there's some more positive news on that front down the line. I've got a previous question I wanted to cover, Sam, from Kim. Do we officially have to write to ourselves as a director and then accept furlough as an employee in writing? Sounds over the top, but yes. Documentation has been mentioned by HMRC and by guidance a number of times. We would strongly recommend that you document decisions. We'd recommend that even if you're a sole director, the company produces a minute, and your accountant can help with that if need be, supporting the fact that you furloughed, so there's something in writing to that effect. And the second question, part of the question actually, is does Taxis make the arrangements for the furlough payment, or do we access their sales online? I think Sam's covered that. Subject to you having an ePAYE account, so Access, you can do it. If you've got an accountant already working for you, particularly if they're doing payroll, it may well be simpler for them to process the claim for you, but that's down to you having a conversation with your accountant, I think. There's a point from Frank there. Could you re-clarify the pay period? Is it a month prior to 19th of March or averaged over 12 months or other period?
Yeah, so that comes back to, you have to look at, if you've got full or part-time, director or employee, then you need to look firstly at basically the pay period on or before the 19th of March. So if you're paid monthly, you're going to still be looking at February. Obviously, if it's weekly, you could be looking at those weeks that come into March. But it's only you want to look over the previous 12 months in the 19-20 tax year, or it's the higher of, or the same month in the previous year. That's only applicable if you've got someone who is working irregular hours or their pay fluctuates. That's when you're going to have to start looking at working out an average, comparing to the same month previously, and you take the higher of the two to compare.
I think again, look at the rules in detail. There are some potential catches in there, so I think just go through with your accountants, try and help on that one. One final one from me, and this again a question that came in just prior to from Andrew, who's got a company, receives the pension, sole director of his company. He's got a director's loan account, so the company owes him money, but he doesn't take any wages as such. He just takes money through his director's loan account when he receives money into the company. So he's saying, what can he do now? The sad answer there is, unfortunately, sorry, Andrew, you're not going to get a furlough. Again, you're not taking salary out of the company. The rules don't stop you drawing down money through your director's loan account. If you're still owed money by the company, you can still continue to draw it. Same as the question earlier, you can still pay yourself dividends from a company.
Yeah.
The company can still continue to do these things, subject to having the cash, of course.
Yeah.
And that's the key there. But where does it leave some companies? And I see there's a number of these comments coming through in the questions about unfairness.
Yeah.
We are seeing a number of small company directors and self-employed find their way to universal credits because they simply can't find a way to receive funding elsewhere, and it's painful to see that. But that is unfortunately the reality for some. All we can say is that we will keep petitioning on behalf, because we do think there's a level of unfairness there, and the survey hopefully will give us a bit more ammunition to do that. Please do keep telling us about it. I think we'll stop questions there because we've been running for a fair bit of time now. We will try to deal with these questions, pass them on to our network to try and come back to you on. So we will try and deal with them. Please do keep looking at the advice on our client hub. Things are changing quickly, as we've said. We will keep it up to date. We're working hard to do that. There's a lot more information, I suspect, coming out this week. It's first week of furloughing. But please look at the hub. Please do talk to our network when you need to, and please do stay safe. And we'll pass you back to James.
Thank you.
Thank you.
Thank you, Sam and Darren. Really appreciate you answering all of those questions. You got through an awful lot of them. There's even more come through live through the session as well. I would just like to say, if you're a client of Tax Assist Accountants and you've got any questions, I've seen a couple of questions coming about payroll. So please do make sure you get in touch with your local office and ask them those questions so they can answer that succinctly for you. As you can tell from the answers we're able to give and some that we're not, there's still an awful lot of information coming out all the time. A lot of the detail from these announcements keeps getting rolled out every single week. We're constantly reviewing this on a daily basis. So as Darren says, please do follow us online. Go on the COVID Business Support Hub that we have built out of this last few weeks. Follow us on social media. We're across all the major social media channels. We have the survey that you'll see as a link in the slides after this session, but we also have put that link into the chat box below so you can complete that. We've had an amazing response. It's really clear that a lot of people are worried and struggling out there, and we want to raise that voice to the government and let them know that people have been left behind, and we want to make sure everyone comes through this as unscathed as possible. So do fill in our survey. It gives us that evidence, it gives that data that we can back up and show those responses and let the government know what's going on out there, as we need more and more voices to do that. So thank you very much for attending. We have another webinar on Monday. We're going to keep running these each Monday during the lockdown, and probably keep that quite general. We've got lots of different questions coming in, and we're going to make sure these slides and the recording of this webinar is sent out to you so you can rewatch it again. But thank you for attending. We really appreciate it. Thank you.